Hello everyone. Today we're going to talk about managing finances. My name is Sanjay Kailaya Nathan, and I'm a software engineering student at Ontario Tech University. I am also the founder and CEO of Accessium Technologies Inc. At Accessium, we build technology-based solutions for people with disabilities.
And I'm Mark Risk. I'm currently studying mechatronics engineering at Ontario Tech University, and I'm also the founder and CEO of Umbo, a safety equipment company designing equipment for emergency responders. Today, we will cover the following topics: preparing budgets, types of funding and income, types of expenses, and tracking financial activity and bookkeeping.
It's important to prepare a budget for your startup and account for all costs. There will be the initial cost of starting up, and then the recurring costs. Plan for day one of your startup. You'll have expenses such as facilities costs, fixed assets, materials and supplies, and other costs. Next, estimate your monthly fixed and variable expenses. Fixed expenses have an agreed upon price and can be things such as rent and utilities, whereas variable expenses are things like production, packaging, and shipping costs, where there usually isn't a fixed cost. And finally, you can estimate your monthly sales and then create a simple cash flow statement with all the information you have gathered.
Now, let's discuss the various types of funding and income for your company. On the left side of the screen, you can see the various types of funding mainly targeted by businesses. There are grants, which is a non-repayable source of funding that can be offered by a private or public company or even the government for various industry sectors. There are loans. One can take out a loan from a bank as a lump sum or take out a line of credit and use the funds as you need it. In this case, you got to be mindful of the interest and fees associated with this loan. The next one is crowdfunding. It essentially involves taking a large amount of people online that will provide you a small amount of money for your service. It's in the form of pre-orders or pre-sales. Now, this type of source will allow you to expand your network and get the word out of your business. The next one is bootstrapping. It's a form of self-funding that can be sourced from a part-time or full-time job or even your personal savings. The last one is angel investment. Angel investors are wealthy individuals who will provide funding in exchange for share or equity into your business. Some investors work in groups and screen deals together before providing funds, while some of them also work on their own. Now, on the right side of the screen, we can see the various types of income a business may experience. The first one is fixed revenue. Fixed revenue typically comes from an agreed upon contract that guarantees the company a set amount of money over a set period of time in exchange for a product and or service. Variable revenue is an inconsistent stream of income that is affected by internal or external factors such as your marketing strategy, season, or economic cycle. The last one is recurring revenue, money that comes in periodically. Some common examples of these recurring revenues are annual recurring revenue and monthly recurring revenue. This is an important figure to keep track of as your business progresses, as it represents your growth.
There are many ways of incurring expenses. However, the most common are overhead costs and the cost of daily operations. Overhead costs refer to an ongoing expense of operating a business. For example, rent, advertising, and repairs are considered overhead since these are ongoing expenses that are not directly related to a specific product or service. The daily costs of operations include salaries, material costs, development and maintenance costs, which are all directly related to a specific product or service.
It is important to keep track of your company's financial activities such as revenue, expenses, and funding sources. In doing this, one can accurately plan out the next steps of their business development, not to mention that it simplifies your tax filing process. Here are some common practices when keeping track of your company's financial activity. First, set up a reliable accounting software system. Please refer to the description for links to amazing bookkeeping software. Second, maintain daily and monthly cash receipts and cash disbursement worksheets. This can be cash receipts from your sales or disbursements as your expenses. Thirdly, you want to account for payroll deductions of your employees. This can be based on bi-weekly salary or weekly salary and so on. You can find the deduction calculator on CRA website. Fourth, keep and maintain your tax records for no less than 4 years in case you get an audit from the CRA, so you're more prepared.
In closing, you should be well aware of the various funding opportunities available to your company to assist in your business development. Be sure to leverage all sources of grants and non-repayable funds and use it as efficiently as possible. Keep in mind that keeping track of your bookkeeping will also simplify your next steps in your growth by knowing where your money is coming from and going to. By doing this, you can make spending adjustments as necessary to ensure that you aren't spending more than you can afford. We hope that you learned some valuable information from this video, and we look forward to seeing you again in our next video. Also, be sure to check out our previous videos if you haven't done so already. Bye for now.